Ladies and gentlemen, this is your Bitcoin captain speaking. We are experiencing some minor turbulence. Don't worry, everything is going to be fine. Just keep your seatbelts fastened and we will get through this just fine. What is up, guys? Dirk here. We are seeing a bit of a pullback here in Bitcoin and the crypto market as expected. So I've been warning about the 4-hour divergence that has been playing out for the last week or so on Bitcoin, and we are finally seeing a bit of a pullback, and this is much needed in the entire uptrend. Okay, so everything is still technically okay. This is perfectly healthy, and I just want to walk you through what I see happening, which levels I'm watching, and I am still actually looking to buy the dip on this pullback. So if you missed out on that rally and you didn't get to buy in lower and you've been feeling that FOMO, now we are getting that pullback, that opportunity that a lot of people are waiting for. So let's dive into the charts and let's have a look at what has been happening. So quick glance at CoinMarketCap, you can see the overview. There is a bit of red. Nothing to worry about too much. Bitcoin is at 21,800, so we are still well above 20,000. There is a lot of red here. As you can see, the last 24 hours, if you sort it by the top losers over here, 14, 13, 11%. So this is the thing. When Bitcoin corrects, the altcoins tend to correct harder in this type of environment. So if we do see a bit further Bitcoin correction, I wouldn't be surprised to see some of these alts that have had crazy gains the last few weeks, to see them drop back by 30, 40, 50%, maybe some of them even more than that. And this is still all within a normal correction. So I made this video about 6 days ago where I was warning about the Bitcoin bearish divergence, where this was showing up in a similar way to before previous drops. We're going to go and take a look at that same chart of how that is playing out now and what I expect for it. So we're back on the Bitcoin 4-hour chart over here on Bitstamp. You can see my annotations are back here, and you can see what we're looking for over here. They disappeared on the RSI, but basically we have this bearish divergence here on the 4-hourly that has in the past and tends to do very often on all different time frames. Is basically it just warns us of a correction that is coming, or maybe even a longer trend reversal. It happened here 3 times since July, you can see over here, and every time it has resulted here in a pullback, in the FTX collapse over here, and so far we are getting the pullback. Now, I do think this time could be a little bit different because we have now reclaimed the 3-day moving average. So if I just switch this to 3 days, you can see that this time is different because we are now above the 3-day 50 moving average here in blue, whereas in the past times before, like I've shown you there, we were not above it. So this was still very much bearish. We got this reclaim now in the higher time frame, and in my opinion, as long as we stay above this 3-day 50 moving average, the trend is still bullish. So that is what I'm watching, which means we could get a retest of 19,000, maybe 18,500 on a wick. As long as we don't get a new 3-day close below this, then the bullish trend is still intact. And you can see this has happened many times also on reclaims. You get to retest this 3-day 50 moving average, sometimes multiple times before continuing higher. So a break above it. This is also at the point of the golden cross on the daily, and usually at points of golden or death crosses we get short-term pullbacks. So this is all completely technically okay and actually expected. Now, one cool thing here to point out also before we talk about the divergence again is just using the simple 50 and 200 moving average. I have the 50 in blue, the 200 in red. You can see that in that bullish trend, that uptrend, as long as we stay above the 50, it's a very good indicator to just help you determine the trend is still bullish. And even here on that pullback that was looking for longs, as long as we're above this 50, the trend is still up. But you can see it starts to roll over here. And once we start getting below it, it's showing signs of weakness. Over here, we got below it for good. We retested, and then the drop to the 200 is the next most likely thing. So you can see over here, when I add this back on, this was all being shown by the charts. Okay, we got the warning of the bearish divergence here on the 4-hour. We got the negative divergence with the RSI. Okay, this is all here. Made that video 6 or 7 days ago here on the channel warning about that. So now we see it play out. It rolls over, it gets below the 50, it goes to the 200. So now we have to see what is the next scenario going to be. How deep does it drop? What are we looking for? And what are possibilities? So we are now in a short-term downtrend or a correction until that is broken again. As you can see, these lows have been swept. We've got them below that. So anyone who's been longing above here with stops there, they're getting taken out. We have this fair value gap over here that is now being filled. And we have hit the 200 MA on the 4-hourly chart. This also coincides with this previous high, as you can see over there. Now, what we also have, of course, over here is we have this low over here, we have this low over here. So it is possible that we target at this point and actually just end up going a little bit below it. Now, from that point on, we're going to have to see, does it just sweep those lows, reclaim this, and then potentially go higher? And then obviously the trigger to long would be a reclaim of this range over here. So that would potentially be a drop to 20,000 or a little bit below 20,000. And that logically also makes sense because if you look at the CME chart, so the CME futures, this is based on the futures of Bitcoin. And this market only trades during a New York time. So it means it's closed on the weekends. It means it closes every day. It's not 24/7 like Bitcoin usually is. So as you can see here, this is the CME futures chart. You can see this gap over here, and that would be filled if the price drops back to about 20,000. It's not a requirement, but we do see gaps filled certain times. Sometimes it takes long to fill them, it leaves it behind, but eventually, most of the time, these gaps tend to get filled. So I wouldn't be surprised to see us hit that 20K level to fill the CME gap. Now, if we don't do it and we just bounce from here and we reclaim this level, this 22,300, the lows over here, that could also be a long signal over here. As long as we're below, I wouldn't touch it until we either get this or until we get this. And then of course the bearish scenario, or the more bearish scenario, would be we have a final line in the sand, which is, like I said, the 3-day 50 moving average, which actually also very interestingly coincides with the Fibonacci golden pocket. So if I take the Fibonacci golden pocket from the lows over here and I take it all the way to the highs over here, you can see that's approximately 18.5 to 18.8. Now the interesting thing here is when I change it to a 3-day chart again, then we have our 50 moving average, which is perfectly at that Fibonacci golden pocket level of the whole zone. So even if we drop back there, this is for me the last defense, the line in the sand for the bulls. This has to hold. If we get a new 3-day close below that 3-day 50 moving average, below this 18.5 level, then we're looking at potentially this whole move just being a trap and us continuing a bearish trend that could take us back down to the lows or maybe even new lows altogether. Until then though, I'm assuming that this is just a pullback within a new bullish trend because we got that reclaim on the 3-day 50 moving average. We got the dollar index below the 50-week moving average, the same conditions that were there for the 2017 bull market and the 2020-2021 bull market. So for me, the trend is bullish based on those higher time frame signals. And now we have to see, we either get a reclaim here, that could potentially be a long over there. Once it reclaims, stop there targeting higher. Otherwise, let's see if we get a sweep here of these lows with a reclaim of that level there, and then that's potentially a long entry. And otherwise, if we continue over here, this would be the line in the sand and probably the best risk reward setup because you know you're in validation. So if the price does end up coming down to this 19,000 level over here, at this point you could take a long position with a short invalidation, because if it closes below the 3-day 50 moving average, I think there's invalidation there, and then we could go a lot lower. So this would be the ultimate opportunity probably to be able to take a long, targeting higher highs than this, targeting 25, 26, maybe even a complete run to over 30,000 if we get that. So that's a very good risk reward over here, but either of these are still a possibility. So now we're going to have to wait and see how this plays out, how deep does this go. And in my opinion, still, this is a pullback in that bullish trend. We have the CME gap at the 20K. A lot of people are going to probably be fearful here that we are going to drop all the way back down. I think the chance is less of that, but time is going to tell. Either way, these are the levels that I'm watching. This is the strategy I'm using to approach it, where I'm looking for long positions. By the way, I trade on Bybit, so if you want to trade spot or futures and you don't yet trade on Bybit, use the link in the description down below. You get cool bonuses and you get to compete in my trading competition and stuff like that. But obviously, you're free to trade wherever you want. And this is how I'm expecting it. So what is going to be interesting to see, we're also early in February. It's only the 9th of February. So we have the complete amount of time for a nice 1 to 2 week pullback potentially. If we get that pullback and then we recover by the end of the month and things look good, then we obviously have that continuation. So a lot of it is going to be resolved this month. I think we will know by the end of the month how this is going to play out and whether this is just a pullback with more continuation upside coming, or whether this whole thing was a fake out and we continue lower. Hope you enjoyed this content. If you did, smash the like button, subscribe to the channel, and I will see you in the next video.